Inflation has made thresholds outdated. Signature authority, procurement, capitalization. When/how to update?
Yeah, so this is a great question. And this actually does come up quite a bit, especially as it relates to capitalization policies, because I know quite a few of us have clients that I don't know when they last updated their capital asset policy, but I know I can tell you I have many clients that still are using $500. And I would argue that even for the smallest government, that's probably outdated at this point. In regards to procurement, that's a little bit trickier because that generally relates to federal awards. And so you're a little bit more at the mercy of the uniform guidance and specifically waiting on updates to be made there. But as it relates to internal controls, your fixed asset capitalization or capital asset capitalization policy, signature authority, and I think that relates to a dollar threshold. So we talked about internal controls having multiple signatures on checks. But in some cases, I know organizations, there will be some dollar threshold. So checks under, say, 500 or 1,000 maybe only require one signature, but above a certain threshold require more. And I would say that it really just depends on your organization, not just the size, but also your risk tolerance. If you feel that you need a better grasp on making sure that checks aren't being written, not just fraudulently, but even in error or, to a fake vendor, then I would argue that a higher level of risk would potentially lead to a lower level of a dollar threshold for some of these. But certainly if you feel that your risk tolerance is not as stringent, then you could absolutely look at raising those thresholds to 1,000, 1,500, in some cases for capital asset policy, 5,000 even may be appropriate. But I don't want to put anyone on the spot, but certainly if there's follow-up questions about your specific organizations, I'd be happy to address that. But really at kind of just an overarching view, I think it really just depends on your risk tolerance and the size and general operations of your organization.
Awesome. Okay, the next question is, where are we? Timing of recognition of ad valorem taxes, and we'll throw that to Tina.
Hello, everyone. All right, so this question was posed, and I believe it probably is stemming from the GAAP or GASB requirement for reporting on the 60-day rule for modified accrual. That was our interpretation, so that's how I'm going to answer the question. So if there needs to be any follow-up, we can, of course, elaborate. But an ad valorem tax essentially is a tax that's based on the assessed value of something. So in most governments cases, municipalities, school districts, that would be your property taxes that you receive. You assess, based on the assessed value, you assess taxes for that. So the timing of recording of this activity is based on the GAAP basis 60-day rule, which stems from GASB 34 and following GASB 34 for government reporting. What you need to do is anything that is received within 60 days after year end gets recorded as revenue. And so from a fund level standpoint, which on fund level, you're reporting modified accrual, that is where the 60-day rule comes into play. And essentially what the 60-day rule means is it's trying to define when funds will be available for the entity to use in the course of your operations to cover current obligations. And so when you have taxes that are assessed in 1 year, you're owed 100% of those taxes, at least based on the timing of payments, segregating out the discount and penalty periods. But in theory, if you assess $1 million, in taxes, you are owed that $1 million in taxes. You will not collect that full $1 million within that year, then the taxes will go to delinquency, or if they're received before they get turned over to the delinquent tax office, then usually that comes from the tax collector. And so what you need to look at is anything that's received after 60 days or after year end within 60 days, you're going to record that as revenue. It would be a receivable since you didn't collect it within your fiscal or calendar year. Receivable, and then the offset is revenue. Whatever tax it relates to or whatever revenue source it relates to would be recorded in that revenue account. And so that's how you identify what is available to be used to cover any upcoming costs that you have. That is just for modified accrual. When you get to the government-wide statements, which is where you're bringing on capital assets and debt, pension, OPEB liabilities, all of that other stuff, that 60-day rule, that availability criteria is not applicable. It is full accrual accounting. You record, if you're owed it, it's a receivable and revenue. There is no differentiation from when you actually collect it. The modified accrual part, if it's within 60 days, it's revenue. If it's after 60 days, you still acknowledge that you're owed funds for whatever purpose. You'll have a receivable, but the offset, instead of being revenue, the offset will be another balance sheet account. It will be your deferred revenue, deferred inflows of resources, as the government terminology is used. And so what you'll call that is unavailable tax revenue, unavailable grant revenue, whatever the case may be. In most cases, it is tax related, but that's where this recognition of revenue for these assessed, this ad valorem tax is coming from. So hopefully that helps kind of explain what that tax is and how you determine what gets recorded and when.
Awesome, thank you. The next question was some information on QuickBooks Online for local governments for non-users. And that one's for Kendra, of course.
Yes. Good morning, everybody. Obviously, after this Ask the Panel session here, there will be more details coming. But just really quick, what I believe this question was getting to and what I get a lot of questions about is desktop going away and when are we going to be forced to go to online? One thing I do want to just kind of throw out there is desktop will be sunsetting. That is coming from Intuit. We just do not know when that is. So you are safe for now to keep your desktop subscription. The only thing I can stress to you is that you cannot, without better wording, start over with QuickBooks Desktop. So it's very important to keep your subscription active and not let anything get suspended with your current desktop subscription, whether that be payroll or your actual company file. You do still have the option to jump to Enterprise. So Enterprise is basically a more robust version of QuickBooks Desktop. So there are still two options out there besides moving to QuickBooks Online. One thing I will go over in my presentation, even if you do not have QuickBooks Online, I suggest you sticking around. I have a video showing you how to get to your Camps account, which will ensure that you don't have that subscription lapse. Also wanted to just touch on some pros and cons really quick before my presentation later. The biggest con that there is when it comes to the local governments and QuickBooks Online is there's a lot of our government entities out there that have multiple company files or funds. The beauty of QuickBooks Desktop is you could have multiple company files or those funds with your one subscription price. That is not the case with QuickBooks Online. They are starting to work on this. And what they have is called it's Intuit Enterprise Suite, which is the online version. And it is still priced astronomically out of a lot of people's budgets. I think I quoted somebody that had 5 company files and it was like $16,000. So that's still out of the picture for a lot of people. But I do just want to be blatantly honest with that, is that's kind of the biggest con when it comes to local governments. Another big issue that we have is, while there are apps out there that can sync in directly with your QuickBooks Online, a lot of your billing softwares are just not there yet. So it would still be a lot of journal entries and stuff like that to get all that information in. The opposite side of that, some of the pros are that there is a very good bank transactions window where you can sync your QuickBooks Online with your bank feeds. That's for both your checking, savings, and all those accounts, as well as credit cards. Another thing that I like about QuickBooks Online is it's a lot easier to have multiple users, meaning the reports only users do not count against you. So if you have board members that want to be able to go in and pull a report at a moment's notice, they're allowed to go in and just be a report only user, and that doesn't count against you. The last thing is obviously that QuickBooks Online is online. It is cloud and internet based. So if you have a lot of part-time employees, people that want to work remotely, it's a lot easier to have your software be cloud and internet based. And that's all I have just for this little session, but feel free to stick around here for a couple more minutes and we'll deep dive a little deeper.
Thanks, Kendra. We have one more question from registration, and then I see one more question in the Q&A. So again, if anyone has any others, please feel free to add those. The next question is, what is the easiest way for a non-financial professional to track SBITA entries? And that's for Craig.
Yeah, so hello again, and just to talk a little bit about SBITA or SBITA, people say it differently, but that stands for Subscription-Based Information Technology Arrangements, and you may be familiar with that. Over the last couple of years, lease standards were implemented, and then SBITA, very similar. So in terms of the, trying to understand the context of the question here from a non-financial professional, ultimately, the result of tracking those arrangements and tracking those agreements and working through the calculations is that essentially more activity shows up on the balance sheet. There's right to use assets offset by deferred inflows, and sometimes they can be pretty significant numbers. So there are a lot of entries that flow into that. I will say that there's different processes in place to create those entries. Sometimes it can be just an Excel spreadsheet. There's multiple vendors out there that offer software programs to help to develop those entries. But I think the key thing that I would say to focus on from a non-financial person, and I'm not sure if this is IT related, is really to understand the universe of the population of the potential agreements. And what happens is when you evaluate those, you ultimately determine which ones could be SBITAs. And then they are input into whatever program you're using, to whether it's an Excel spreadsheet or a program, to develop those entries to ultimately flow into the books. And the thing that I would say to focus on the most and to make sure that is being tracked is the terms of those agreements, and making sure that that's reviewed annually at least, to see if there's any changes in those terms, because it's really, once you get it into the process of developing the calculations, it is something that needs to be monitored going forward. So you want to make sure that you have processes in place to make sure that any of the changes to those agreements are adequately updated. And then ultimately, if there's any new agreements, that they are also included in those calculations. So hopefully that answers that question a bit, and certainly available here for any additional follow-up questions related to SBITA if there would be anything else. Thank you.
All right, thank you. There is a poll question. Fun fact, about half of you want to go to space. It's usually like most people say no, so I thought it was interesting that everyone just wants to get off Earth at this point. Okay, so the question that was submitted is, would you describe best practices for procurement as it relates to checking for vendors, suspension, or debarment when using federal funds?
So Christina, I think this one is a follow-up to mine, so I'll just go ahead and tackle this one. If you are not familiar, there is a website, sam.gov, SAM, S-A-M, just like the boy's name. That is going to be your resource to go out and you can do a vendor search to determine if an organization has been suspended or debarred from federal contracts. I will say, without going into a ton of detail here, there are also YouTube videos online that walk you through that process. And there is also a direct PDF here that I have like the instructions. And I'm not sure if I put that in the Q&A from my end, Christina, will they be able to see that?
No, but I can send it in the follow-up email.
Okay, great. So I will get this to Christina, and then when she sends the slide deck out, we'll include that as well. Hopefully that's helpful, but you're also welcome to unmute yourself if you have any other follow-up questions.
I'll just add one small piece to that. There is the ability to have the vendor provide a certification that they are not suspended or debarred. So if you want to try to get that from the vendor, you can do that as well. I think it's typically easier to do the certification or checking it yourself, but the vendors can provide a certification for that piece as well. So just a small nugget in case it's something that's reoccurring every year. And if you're entering into an agreement, you can bake that into the agreement and they can certify that each and every year. So thank you.